Assalamu alaikum, everyone, and good evening. This is Junaid Khalid, your course instructor for F7, that is financial reporting. I would like to welcome you all for this session, and inshallah, we are going to start this session and this course. Let me discuss something the paper pattern and the criteria, the course outline of F7, that is financial reporting. So, let's start with that one. Uh, First of all, let's discuss the paper pattern of F7, that is financial reporting. Basically, the financial reporting, the F7 paper is divided into three sections, that is section A, section B, and section C. Now, section A will cover the OT questions, that is objective test questions, in which 15 MCQs will be tested, and each MCQ will carry 2 marks. Section B will consist of OTC, that is OT cases, objective test cases, in which three cases will be discussed. Each case will consist of 5 questions, that is 5 MCQ, and each MCQ will carry 2 marks, which means one OT case will carry 10 marks. And if three OT cases are tested in section B, it means the weightage of section B is for 30 marks, which means section A will consist of 30 marks. That means 15 questions, 15 MCQs, 2 marks each. The weightage of section A is 30 marks. The weightage of section B is 30 marks, which means now the total marks for section A and B is 60 marks. Remaining 40 marks will pertain with section C. Now, section C is a CRQ section. CRQ stands for, that is constructive response questions, in which two long questions will be tested. Each question will carry 20 marks, which means two questions will carry 40 marks. Now, what's new in that area? If we compare that paper or course with the previous one, that is the basic course of F7, it was F3 financial accounting. Many students ask whether there is any difference between these two. Yes, there is a huge difference. There is a massive difference in terms of paper pattern, in terms of course outline, in terms of paper preparation and strategy. There is a huge difference. Many people and many students, many candidates say that it's completely same with F3, which we have done in FIA level and foundation level. It's not same. There is a huge difference in it. We'll discuss that in later. Okay, now let's come back to CRQ section, that is constructive response question, in which a question will be given to you. For instance, if you have studied F3, that is financial accounting, there is a question of consolidation. Whole questions will be on your screen, on the left side of your screen, and then you have to draft the solution on a spreadsheet or Excel file. It means if we compare with F3, that is a financial accounting. In financial accounting, you don't need to draft a question. There in financial accounting in F3 level, you have a pre-printed or you have a format which is on your screen. You just have to fill that empty boxes. You just have to fill that empty boxes in F3 level. But in F7, that is financial reporting, you have to draft the whole solution, which means you have to draft the balance sheet, you have to put all your workings on that Excel file, you have to draft each and everything, just like you draft that answers in your paper. While you're preparing, you definitely work out workings, you work out the solution, you are doing your working on your paper. Likewise, you have to work out all those things in that Excel file. So it means the major part of this paper, or I would say the student in which the student face so difficulties, that is the how to handle with the Excel file, how to incorporate all your answers and workings on that Excel file, which means for the preparation of this paper or even any paper of this skills level, you have a good command on your keyboard, you have a good command on Excel file, on the Word file. Because if you are not good at your typing speed, if you're not good at your keyboard keys, so it means you have to face the music. You will trouble in this paper, and not in this paper but all the papers of the skills level. So you have to work out on your typing speed, and the best part and the best way to consider, the best way to come up with this problem is to note down all your lectures in your Excel file, on your Word file. Once you are very good at your typing, inshallah, you will not face any difficulties while portraying or while preparing or while putting all your answers in Excel file or the Word file. Inshallah, you will not face any problem. So that was the paper pattern, and definitely you can see that on your screen, the paper pattern of F7, that is financial reporting. Now coming next to the course outline. What is the course outline and what chapters and what areas are included? Usually I share this course outline at the start of the session, reason being so that to finish up, so that to come out of this dalmia, that if this course is similar to F3, no, exactly, I would say it's not similar to F3. Reason being, if you just skim that course outline, we are not going to discuss that course outline, we are not going to start all these areas all of a sudden, but just skim the topics of these course of these chapters of F7 financial reporting. Definitely you will see and you will observe that it's not similar to F3. Hardly, I would say, that 30% of F3 you will definitely revise those areas which you have covered in F3, is around 30%, in which the basic standards were IAS 16, property, plant and equipment, in which new areas will also be discussed. Likewise, IAS 10, IAS 37, and again in IAS 37, if you have studied IAS 37, there are many things which you have not covered in F3 level. So definitely there are some upgraded areas in IAS 37 as well. IAS 2, it's similar to F3, and I would say these are the IAS 38 intangible. Yes, you have studied that in F3 level, and remaining, if you just look at the course outline, the maximum or the 70 to 80% are those areas or the standards which you have not covered yet in F3 level. So just come out of this thinking or this myth that it's similar to F3 if you have scored a good marks in F3, and if you are sharp in F3, if you are tiger in F3, so you will just cover this F7 and all of a sudden. It's not the case. You have to work hard, you have to give 100% concentration level, you have to work hard in this standard, in this chapter, in this course, in this paper. So that is the course outline. And coming back, going down, and let's discuss the difficulty level, or we can say that the passing ratio F7, that is financial reporting. If you just compare the uh, uh, F7, that is financial reporting, with other papers, I would say the passing ratio, the global passing ratio of F7, that is financial reporting, is comparatively better than the others. Just look at the passing ratio of F5, that is 41% in the last attempt, and audit, that is F8 39, F9 52, and F6, that is 52, and FR, that is 51. It means reasonably a good passing ratio, global passing ratio. March 2022 attempt, F5 40%, F8 44%, and likewise the F9 and F7 have equal percent, equal global passing ratio. So I would say it's not on the poor side. If you look at the F5 and F8, the most dangerous subject, it's a dangerous subject, and most of the students feel so fear. They don't mostly students, they don't attempt F5 in the first as a first skills paper, because of, you can see the passing ratio of F5 is quite embarrassing, or you can say that it's quite fearful. So F7, a good passing ratio, and I think that you can clear that paper in the first attempt, and it's a doable task, 100% doable task. You have to do few things. Just remember few things, you can note it down. Number one, you need to follow the instruction of your course facilitator, number one. Number two, practice more and more. You have to practice more and more, and that practice should be on your computers, Excel file, Word file. Many students don't follow the instruction, and what they do, they practice, they have a good grip on their standards, they are very sharp at their standards, they know the accounting treatment of all standards, but what they do, they don't practice on word file or the excel file, resulting they face problem while attempting the paper. They don't have a grip on that paper, and those 3 hours of the papers are a nightmare for them. Reason being, they are not useful. They are not up to date. They have not practiced their questions in excel file or the word file, because of which they flunked the paper, or if they pass it, they couldn't pass with the good marks, although they deserve it. So I would request you all, uh, please practice each and every question on excel file, word file. If you can't practice each and every question, practice maximum on the excel file or the word file. Okay. KNS passing ratio, alhamdulillah, for the last 5 to 6 attempts, it is alhamdulillah, it's good, and it's above the global passing ratio. You can see it on your screen. That is in June 2022, December 2021, June 21, and December 20. In all the previous last attempts, it's above the global passing ratio. So that was all the introduction of the course, and the global passing ratios I have discussed with you, and the paper pattern which I've discussed with you. Let's start with the first chapter, which I will start is the framework. No doubt it's a theoretical chapter, and I would say it's an important chapter with respect to that it contains the basics of all accounting standards. And what I believe, if you are not up to date with the basics, if you don't know the basics or the accounting principles or the accounting theory, it would be so difficult to understand the upcoming standards. So I personally believe that basics should be discussed first. Inshallah, we'll start from the scratch, and what I follow the methodology is that I always consider that students have no idea about it. I will never presume, or I will not assume that you know something. I know you will be telling yourself that it's quite true. It's quite true that we don't know something. And I will, inshallah, consider this one, that you don't know something, and I will not assume, and I will not left out any area. I will not left by presuming that you have an idea about it. No, I would say you don't have any idea about it. We'll start from the scratch. We'll discuss each and every standard in detail with complete course coverage, inshallah. And even those standards which you have already covered in F3 level, we'll discuss that area as well in detail, inshallah. So let's start with the first chapter of the standard. In all accounting standard which will be discussed, we'll first discuss the importance with respect to paper, in which section that chapter or standard can be tested, number one. Number two, about how many percentage of the paper this standard will comprises of, or if we discuss it, that how much marks this standard may cover in your exams. We'll discuss first this in all chapters, in all standards, and then we'll start with this standard. Okay. The standard which we are going to start is known as a framework. Okay. It's a framework. It's now framework. Exam, with respect to exam or the paper pattern or the exam point of view, how important this standard is. So this standard can be tested in your paper with 2 to 3 MCQs maximum. It's maximum. It's not it's not tested on a frequent basis, but still, if I say 2 MCQs could be tested, which means each MCQ would carry 2 marks, and 2 MCQs if tested, it means the 4% of your paper. Four, and it matters a lot. It matters a lot. Remember, you can say that 96 plus 4, it's 100%. Okay. So, or if you can, half of glass is full and half of glass is empty. If you take on the negative side, 46 plus 4, it will make 50. So it's not the area that you can leave it. It's one of the most easiest area. I would say it is one of the most easiest area. And if you are losing that area, if you don't prepare yourself and And believe me, majority of the students and the course facilitator do not cover this area. Reason being, it's a theoretical side. People or students or candidates do not take interest on this area. So just leave it. I would say don't leave it. It's one of the easiest area, easiest marks you can score it. Okay, and one of the shortest area as well. And if I think what I personally believe, if you can score, if you can cover any area in a less possible period of time, and you can score around 4 to 5% of the paper, I would say do not leave that area. So starting with the framework, I just discussed the importance of this standard with respect to paper point of view, that how important it is. Not that important, but yes, two MCQs if tested, it means 4% of the paper. Let's start with the standard. Okay, framework. First of all, I will first discuss the scope of this standard, that what are we going to discuss in this, and then we'll start and we'll dig out each and every area. Okay, okay. First of all, if I discuss with the accounting standards, that definitely if you want to perform the accounting, in order to perform the accounting, we have two accounting standards in the world. Throughout the world, we have two most leading accounting standards. Always remember, if you wanted to run anything, any organization, any operations, or any country or state, you need certain rules and regulations. Without rules and regulation, no organization, no system can be run successfully. So in order to run the accounting, if you want that accounting systems are run in a very peaceful way, in an organized way, we need accounting rules and regulations. And right now we have two basic accounting rules or standards available in the world, in which the one is known as IFRS, the other is known as GAAP, that is GAAP. Now, what is IFRS stands for? Definitely, you have an idea about it. You have already discussed, or you have already read out, or you have already covered this area in your F3 paper, that is financial accounting paper. But what I said, I will start from the scratch, from the beginning. I would consider, I would say that you don't have any idea about it, or if you have an idea about it, you must have forgot that area. So IFRS stands for International Financial Reporting Standard. International Financial Reporting Standard. International Financial Reporting Standard. Okay. Now, GAAP stands for what? GAAP stands for Generally Accepted Accounting Principle. Generally Accepted Accounting Principles. Okay. So two rules, two systems are available. Majority of the world, majority of the countries follow IFRS, that is International Financial Reporting Standard. Some countries do follow generally accepted accounting principles. Sir, is there any difference between these two? Yes, there are some differences. There are some contradictions between these two systems, IFRS and generally accepted accounting principles. But majority of the world, majority of the countries do follow IFRS, and in ACCA we are also here to study IFRS, that is International Financial Reporting Standard. So now we are going to discuss this one. Okay, this is not our domain. We are not going to discuss the generally accepted accounting principles, how these standards are developed, how generally accepted accounting principles are covered. We are not here to discuss this one, but yes, we must know about the IFRS and its all detail, and how these standards are created, who creates these standards, and all the areas of IFRS, that is financial reporting standard. Okay, now let's come down and dig it out. Okay, IFRS, International Financial Reporting Standards. IFRS have different chapters, and these chapters are known as IAS. IAS stands for International Accounting Standard. As we see, chapter number 1, chapter number 2, but here we have chapter number 1. No, here we have IAS 1, IAS 2, IAS IAS 7, likewise IAS 8, and in the same way we have IAS 10, IAS 12, and so on and so on. This continues on and on. And recently, if I would say, the last standard of IAS was, that is IAS 41. Now, these are chapters basically, chapter number one, chapter number two, but in IFRS, we don't say it chapter number one, we say it as IAS 1, IAS 2, IAS 7, and so on. Now, these International Accounting Standard 1, International Accounting Standard 2 will discuss the accounting treatment of any area. For example, if I would say IAS 2, that is International Accounting Standard 2, will discuss or will give you an idea about the inventory valuation, how to account for in-print inventory. Inventory shall be recorded at the lower of cost. You definitely have gone through this area. Lower of cost, NRV, FIFO method, FCO method, perpetual, periodic. All these accounting treatments are discussed in IAS 2. Likewise, IAS 7, cash flow statement, how to prepare the cash flow statement. There are two methods, direct, indirect. It means every standard will contain details of accounting treatment of any area, of any specific area. Okay, now IAS 41 was the last standard, and after that, IAS 41, the Accounting Standard Board, inshallah, we'll discuss about this one. International Accounting Standard Board decided, and they decided to discontinue the sequence of IAS for IAS. Now the new sequencing is known as IFRS, which means after IAS 1, there was a chance that IAS 42 should be incorporated, but instead of IAS 42, they started a new sequencing with the name of IFRS, and the next standard after IAS 41 was IFRS 1, and then it continues and it started IFRS 2, IFRS 3, 4, 5, 6. Every new standard will now follow a new sequencing, that is IFRS, and this has reached to IFRS 17. IFRS 17, and now any new standard which will be launched will be recognized as IFRS 18, and so on. So many of the students and candidates ask that what is the difference between IAS and IFRS. So practically speaking, there is no as such difference in between IAS and IFRS. Both are same. The outdated name was IAS and the new name is IFRS. So that is both the standards, IFRS and IAS, both are same. There is no as such a huge difference. Okay. Now coming back, who creates this IFRS? One who is responsible for the creation of IFRS, one who is responsible for the upgradation of IFRS. We'll discuss this one in this chapter. Okay. Okay. Before I start this chapter, let's discuss the scope of this chapter. This chapter will consist of, will discuss in detail the framework. The term framework, will discuss what is framework. In this framework, we'll discuss two main areas. That is, number one, the regulatory framework, and second one is conceptual framework. Regulatory framework and conceptual framework. Okay, first discuss what is framework. Framework is basically a set of rules. Framework is basically a set of rules, or we can say that it's a structure. It's a structure. In order to make it so easy, we can say that it's a rules and regulations. Framework means the rules and regulation. It's a structure. Now that framework is made so that the accounting process becomes so easy. It's easy to understand, it's easy to implement, it's easy to interpret. So framework means a structure, that is the rules. Now framework or the structure has two main components, that is the regulatory framework and the conceptual framework. If we discuss about the regulatory framework, in regulatory framework we'll discuss two things. Number one, the regulatory bodies. Regulatory bodies, it means who are those who manage or who incorporate or who establish those standards. Number one, the regulatory bodies, and number one, the regulatory bodies, and number two, the standard setting process. How do standard created? How standards are created? Standard setting process. If I say that IAS 16 how this standard was created, what was the process behind it. We'll discuss this one. So first, the target is, we'll discuss the regulatory framework. In regulatory framework, we'll discuss two things. Number one, the regulatory bodies, that who are those, who are the authoritative, who establish those standards. And number two is the standard setting process. We'll discuss two things. Now coming to this regulatory bodies. Regulatory bodies, if we discuss about the regulatory bodies, there is a foremost and the basic regulatory body is IFRS Foundation. Now, what is IFRS Foundation? IFRS Foundation is the apex of all. It's apex of all. It's the head of everything. First, the IFRS Foundation was created, and IFRS Foundation, that is the organization that was created, and reason for the creation of this organization was number one, that is the first objective of IFRS Foundation was to establish I would say, or prepare the standard, globally accepted standard. The basic objective of IFRS Foundation was to prepare the globally accepted accounting standard. It means IFRS Foundation was established with the main idea, with the main purpose, that is to establish or to prepare the globally accepted accounting standard. And it was not about only to prepare or establish, but the second target and the second objective of IFRS Foundation is to implement the accounting standard, implement the IFRS, implementation of IFRS. Whatsoever the accounting standards are prepared or established, let's implement those IFRS all over the world. And the third objective of IFRS Foundation, and it was a major objective and one of the most difficult objective, that is the maximum convergence with national laws. Maximum convergence. Now, maximum convergence means it should be maximum integrated, maximum connected with the national laws. Now, why this was a difficult or a challenging task? Reason being, if IFRS Foundation created any accounting or established any or prepared any accounting standard, there are hundreds of countries in the world. There might be a very big possibility that accounting standard or IFRS established by IFRS Foundation may contradict with any national law of a country. So the objective of IFRS Foundation was that accounting standards must have a maximum convergence, maximum linking with the national laws of all countries, and that's not so easy. It's not an easy task. Don't think it's an easy task. You cannot have an idea, you cannot have your thought with in compliance with your partner. There might be a discrimination, there might be a dispute, there might be a contradiction with your partner, as two minds cannot be gathered at one point. It's not that an easy task. So it was a very challenging task for IFRS Foundation, that it should have a maximum convergence, accounting standard must have a maximum convergence with the national laws. So that was the three basic objective of IFRS Foundation. And with these three basic objective, what IFRS Foundation did, IFRS Foundation created another organization that is known as IASB. IASB stands for International Accounting Standard Board. International Accounting Standard Board, IASB, International Accounting Standard Board. Now, International Accounting Standard Board, IASB, has further sub-departments. That is, number one, the first department is IFRS. AC. What is AC? I will discuss this one in detail. Number two, second department is IASC, and third department is IFRSIC. Now, IFRS AC stands for International Financial Reporting Standard Advisory Council. Is AC stands for Advisory Council. IASC, International Accounting Standard Committee. IFRS IC, International Financial Reporting Standard Interpretation Committee. Interpretation Committee. So these are the further departments of IASB, that is International Accounting Standard Board, and each department have their own task, that is the own job description. If I ask about IFRS AC Advisory Council, what is the task or what is the objective, what is the core agenda of this department Advisory Council is to highlight issues. The basic objective of this advisory council is to highlight issues, that is the difficulties or the problems, that is to highlight the problems in accounting, highlight problems or issues in accounting. Advisory council first of all highlight or find out the problems which being faced by the countries or the companies in implementation of IFRS. So advisory council will highlight the issue. For example, let's take a very basic example. Let's say when the IAS 16 was not in a rule, or IAS 16 was not that established or was not incorporated. So what was done in before the development of IAS 16? All expenditures were recognized in PNL. All expenditures were recognized in PNL as a revenue expenditure. There was no concept of a capital expenditure. There was no concept of property, plant, and equipment, that is non-current asset. All of those expenditures were recognized in PNL. Now, the problem which advisory council highlighted, that in a year one, for example, company purchased a furniture for 5 million. What they did, they recognized that 5 million in PNL. In year two, there was no as such expenditure incurred. It means no expenditure was recognized in PNL, which means the year one profit was understated, and it was understated with a massive amount, and year two profit was overstated with a massive amount. Again, third year they purchased some furniture, again it was charged to PNL, the profit was declined, and there was no consistency. Now, that was the problem which was highlighted by the advisory council. Advisory council highlighted that problem. It was discussed in a meeting, and there was a standard setting process. We'll discuss inshallah. And that problem was raised, it was discussed, and they finalized the solution. They made some rules, and that rules were made by that rules were made by committee. So International Accounting Standard Committee is there to establish the accounting standard. They have a prime responsibility to establish IFRS. It means the IFRS and rules are established by the IASC, that is International Accounting Standard Committee. Let's say IAS 16 was incorporated, IAS 16 was established, and that was established by IASC, that is International Accounting Standard Committee. Now, once this committee has established an accounting standard, definitely there are some problems. And what are those problems? How to implement that standard, what is the reason behind it, what are the logic behind it for the implementation or for the development of this accounting standard, why this rule was incorporated, and what was the rationality behind it. So all these confusions are cleared by the team or the committee that is known as interpretation committee. So interpretation committee gives you an explanation of the accounting standard. So why the standard is established, what was the reason behind it, and why these treatments were incorporated or why these treatments were accounted for. So all these explanations will be given by the interpretation committee. So these are the three main departments of IASB, that is International Accounting Standard Board, and each department or each committee has its own task. So that was the first area which we discussed, that is the regulatory bodies. So what regulatory bodies we do have? Number one, the IFRS Foundation, the apex of all. ISB, that is International Accounting Standard Board, and this accounting standard board have three different departments, that is IFRS AC Advisory Council, IESC Committee, that is, and third one is the Interpretation Committee. Now let's move on to the second part, that is the standard setting process. What is that standard setting process? How the particular standard is being incorporated, how the standards are recognized, or how what are the procedures, what is the procedure for the development of these accounting standards. So let's discuss this one. Now, if I wanted to establish any accounting standard, for example, if it is IS 16 or any other accounting standard, the first and the foremost step that is done by that is the preparation of exposure draft. Exposure draft, or we can say that exposure draft, or we can say that say it as a discussion paper. Exposure draft or a discussion paper. Now step one, that is the exposure draft or a discussion paper. In this exposure draft, before this one exposure draft, what is being done, that advisory council IFRS AC discuss the problem with IASB, that is the whole board, whole team. International Accounting Standard Board and Advisory Council discuss the issues. So what issues we are facing in the interpretation or in the implementation of accounting standards. Once the issue is discussed, step number one, exposure draft of the discussion paper is presented or prepared by the team of committee, that is IASC committee will prepare an exposure draft or the discussion paper. Now this discussion paper will be sent to 166 countries of the world, and these are the countries in which the IFRS is implemented. 166 countries. And before that in this IASB, International Accounting Standard Board, it has 14 members. 14 members, a team of 14 members, which are from, and these members are from 9 different countries. These are basically the European countries, 9 different countries, 14 members. 14 members are there in the team, and they will discuss the issue. They will make exposure draft or a discussion paper, and will send that discussion paper or exposure draft to 166 countries, and they will open for the public comments. So the public can comment, or public comments means public comment means it means the local chartered accountancy bodies will comment on those exposure draft, on that exposure draft, whether the exposure draft is feasible or not, whether it is in compliance with the national laws or not, is there any contradiction, is there any impossible accounting treatment in that exposure draft. They will file, or they will submit a public comment. The countries, all 166 countries will give their opinion to IASB, International Accounting Standard Board. Once the recommendations are received, or suggestions are received by 166 countries, that is from 166 countries, now another, that draft will be upgraded, and that draft will be upgraded. And okay, one thing I just wanted to make it correct, that is known as draft proposal. Okay, it's a proposal. Once the draft is upgraded, now the other draft will known as exposure draft. Please make it correct. This will known as what? Exposure draft. So after draft proposal, exposure draft will be prepared. Whatever it was discussed in a discussion paper, draft proposal will be upgraded, changes will be made, exposure draft will be made, and then again this exposure draft will be sent to 166 countries for public comments. Why this activity is being carried out? Don't forget the objective or agenda, or the agenda of IFRS Foundation. The agenda of IFRS Foundation was maximum convergence with the national laws, and this could only be done by this activity. Now again 166 countries will respond, yes, there are improvement, yes, now it's convergence, or it's linking with the national laws. People will again comment. Some of the countries might suggest some different accounting treatment, and again the comments will receive by the IASB, International Accounting Standard Board. Afterwards, once the comments are received, step 3, that exposure draft will be upgraded, And once it is upgraded, a yellow paper is prepared. Yellow paper in which the upgraded accounting treatment is accounted for. Now yellow paper is not sent to 166 countries, although it is sent to 9 member countries. 9 member countries for observation purpose. They will observe whether these accounting standards are working properly or not, is if there is any problem in the implementation or not. So they will send that yellow paper for observation purpose in 9 member countries. Afterwards, once it is approved or any changes are required, after being making all the changes, now step 4, that is the last step, that is the implementation of standard. It means the final draft will be made. Final draft will be made in which the implementation will be carried out in 166 countries. Implementation in 166 countries. Implementation will be done in 166 countries. It means that final draft will create an IFRS, that is IAS 16, or any other accounting standard will come into existence once the final draft is prepared, and then interpretation committee will issue interpretations and explanation regarding those accounting standard. So that was the standard setting process and the second part of a regulatory framework. So regulatory framework has two different parts, that is the regulatory bodies which we have discussed, and the standard setting process which we discussed right now. So that was the first phase, and the second phase is, that is the conceptual framework. What is conceptual framework? This will take a detailed time span of time. We'll discuss in next class. Thank you so much.